Hey, what's up guys? Making a quick video here on something really important that you understand: the captive insurance world versus the independent insurance world. It's a question very commonly asked, and let's dive right into it. Okay, so first things first, I'll talk about the captive world, and I'll kind of draw a little diagram exactly showing so that I can kind of clearly show what the captive world looks like versus an independent world. So I'll write here captive agent. Okay, that's the captive agent. And over here I'll put independent agent. I'm just going quick, guys. So. All right, so big thing here, captive agencies. The difference between the two, and most people probably know this, is that captive agents represent one major company, like Farmers, State Farm, Allstate. These are captive companies. So, what kind of, what products can they sell? They can sell Farmers Auto, Home, State Farm, auto, right? And then Allstate auto, home, business, whatever commercial business they can do, but they can't sell each other's. They can only sell their own. That's right. So that's how that works, the captive world. So the independent agent, so the independent, what also is called a broker, is basically not restricted to one company. They can sell Liberty Mutual. They can sell Nationwide. They can sell Hartford, Safeco, Travelers, etc. The one thing that they cannot sell, so this is where the no-go is, basically they can't sell Farmers, they can't sell Allstate, and they can't sell State Farm. That's where they're restricted. So that's the one downside of being a broker. Here you're stuck with one product. Here you have the flexibility of multiple companies, but are restricted to their product, which is their exclusive captive product. That's pretty much what it comes down to. So here, as a broker, you have a lot of flexibility. And another great thing about that, and this is something I want to bring up because a lot of agents that are going into the independent brokerage, independent agency world, they want to know about non-standard companies. So along with all these that are called standard companies like Nationwide, Liberty, the Hartford, Travelers, Safeco, there's also what's called, and the brokers can do this as well, non-standard. And so what these companies are basically wholesale companies that you approach that can help you find coverage for tricky and difficult products. So difficult products being, let's just say, a homeowner's policy in a fire area, or let's just say a building, a massive building that would never fall into the appetite, what's also called the appetite of Safeco, Liberty, also, Nationwide, the Hartford, Travelers. It's too big, it's out of their appetite. These insurance companies, they have formulas for success, and they have this criteria that needs to be met in order to be eligible. So let's just say it's a $50 million building. Safeco is gonna be like, no way, we don't touch that kind of stuff. Liberty is gonna be like, no way, we don't touch that kind of stuff. They have their algorithms and numbers that make sense for what is insurable for them. So basically these non-standard companies are a different market access for all these kind of higher risk, trickier stuff. And the one downside to these things, at least in California, the non-standard companies, and I'll give you an example, like one of them is called Lloyd's of London. It's one of the largest, and actually I don't quote me on this, but I believe it's the first insurance carrier, maybe. It's like super old. It's extremely deep pockets. They're very financially strong. They can write like a lot of different difficult stuff. The one tricky part about these kinds of companies, like Lloyd's or Admiral is one of them. the tricky part about these is that they're not backed by the California Surety Fund. So if they go bankrupt, let's just say everybody starts making claims and then they go bankrupt, the California Fund, Surety Fund, does not protect them, does not basically bail them out. So they're basically kind of like almost like private companies that are insuring, even though they're rated A+, A- or A, whatever rating they are as a financially strong company, they don't necessarily have that government financial or state backing. So that's a tricky and a downside to them. But like I said, and they tend to be a lot more expensive. Also, I won't dive into this too much, but the accounting and the actual process of selling one of these policies is a lot messier than it is to sell standard policies like Safeco, Liberty, Travelers, Mercury, whatever you're selling, because you can set people up, you bind it online automatically yourself, you log in, you submit the quote, you bind the coverage, and you set them up on auto pay, and you don't even have to talk to them at renewal. You should still, but you don't even have to at that point because it's such a clean system. Here you have to submit applications, manual applications, accord forms, if you're familiar with accords, and you need to have everything manually signed. You need to collect payment to your agency and then pay it out to the company. It's a messy process. But the thing about that too, so the grass is always greener, guys. That's basically what it comes down to. The thing about these, the premiums are usually pretty big because they're higher risk stuff and it's a little trickier. So insurance is more expensive, thus more commission. So there's benefits, there's pros, there's cons, but at the end of the day, the most important thing is that you insure your customer properly. You don't just go here to the non-standard world. You always go to the standard stuff first if they're eligible. And then if you're on the captive side, in the captive world, you basically write everything that fits into the criteria of Allstate, State Farm, Farmers, and that's pretty much what I got for you. And yeah, hopefully that kind of clears up, and this is how it kind of looks in my mind, I guess. I probably can make this clearer, but that's kind of the gist of it. Captive world, you kind of are restricted to your products, your company's products, and you have a lot of backing. There's a lot of benefits to this as well. So lots of great benefits that come with even maybe salary base, commission bonuses, the branding, the strength of the name of State Farm. You got Drake, you even got Drake up in here. Allstate's got the guy with the hands. Farmers has got like the duck or something, right? I'm just kidding. I don't know if they have a duck. But the independent brokers, you have to brand yourself. I'm by myself over here. I didn't have anybody to help me open my office. I didn't have any marketing spend. I didn't have the name. Like, who knows what the hell is Adelfia Insurance? Nobody knows. I have to make that. The accounting, the marketing, the trust factor. So that's where it gets tricky. Being an independent broker, everything's out of your pocket, office, phones, everything. So tricky, but also there's a lot more freedom. On this side, there's a lot of restrictions. The company has, marketing restrictions, and they wouldn't be able to make this video, that's for sure. So by all means, like I said, the grass is always greener. Sometimes I'm jealous of State Farm and Farmers, people that I talk to, and I'm like, shoot, I would love to have that incentive or that product or whatever. But then they look at me, and then I'm over here marketing, and then they see like, oh wow, like this guy can write a building that's a giant building or a big business. So the grass is always greener. I personally like the freedom. I like to build, and I like to do my thing and not have anybody looking over my shoulder. Like here they have reps coming out on a regular, I think monthly, a couple months, they come and do a checkup on you to make sure that you're hitting your premium numbers and goals. Here, nobody talks to me. I'm like by myself, and like I'm lucky if somebody wants to reach out and talk to me. I'm like excited about that. So that's pretty much it. Hopefully that clears that stuff up. The non-standard world is a very tricky and interesting world, so get to know that. It's outside of this, and the only way to access this is through wholesale companies. A couple of them, I'll just throw them out there. RPS, Burns & Wilcox, CRC, TAPCO. These are all wholesale companies. If you Google those names and you reach out to them, they're pretty much every state in the country. So it applies to probably everybody. And that's pretty much it. That's all I got. Hopefully that was helpful. We will see you guys at the top. Did you get that?
Oh, yeah.
And that's it. That's all I got. Hopefully, if anybody has questions, contact me, chriscostantini.com. You can email me at chris@adelfiainsurance.com. And we are hiring as well. So anybody in California looking to dive into an agency that is growing and there's a lot of room for potential opportunity and success, shoot me an email, give me your resume. Happy to look at it. We're going to be doing hiring in the next week or two. We're going to be going through the rounds of interviews. So looking forward to talking to you guys. Talk to you soon and see you at the top.